What's the first thing you've done? Yeah. You've developed some kind of rough bias for the day. Just in that quick, short decision. Now, it might be a Swissy chart. Heck, you might look at a Kiwi daily chart and be like, oh, okay, the Kiwi daily chart's at a major level of resistance. You know, let's say we log in tomorrow and you notice that the Aussie dollar is back at 106.10. In all likelihood, what do you think's going to happen at that area? Realistically. So we come in tomorrow, it's like 6 o'clock London time, and the Aussie has gone up through Asia and is lurking around the early 106s. What do you think's likely to happen? Yeah, probably gonna head down a little bit, right? That's some serious resistance. It's probably gonna try and roll over just a little bit. So it would have risen the better part of 180, 200 pips right into daily resistance. You have it on pretty good authority that you're gonna see some red in all likelihood. I say all likelihood because this is trading at the end of the day. Nothing has to do anything. Okay, but probability dictates probably going to try and roll over a little bit. Hey, guess what? You've now found a starting point for the day. Okay, you know, now you say, right, if I'm going to get red on the Aussie, how am I going to go about selling that potentially? What is it going to look like? Is the euro going to be at the same sort of resistance? Is this only going to be an Aussie dollar move? Right, but at least you have a starting point. You have a bias for a pair, and then you can work out where you want to go from there. It all kind of leads into each other, right? Okay, so first things first, developing a bias. Now, I like to develop biases. I don't know what the plural of that is. Well, I think direction is, you're talking about a sort of a nuanced definition there. A bias for me is, what do I think is going to happen? Direction is, what is the established movement for that day? So in other words, my bias was long for the euro, but there wasn't upside direction at the time. Now there's direction as well. Now there's upside direction. Okay, what about, and a lot of this is going to come with experience. What about, and I'm a pivot guy too, right? So what happens if you log in and you look at the Euro USD to notice that it's at its weekly central pivot and daily R2 for the day right around London open towards sort of 7, 8 o'clock London time. In all likelihood, what do you think is going to happen? You had a weekly central and you had a daily R2. Probably going to drop. That's going to represent resistance. You're probably going to see some things rolling over. Okay? You know, I always like to set myself a contingency, and I'm not ignoring your questions there, guys. I'll get right to that. You know, I like to have a contingency for stuff as, okay, if it breaks all of that, alright, the writing's on the wall, we're heading up, and I've got to rethink things. But in all likelihood, that's going to represent a turning point. Okay? What about the euro has fallen through New York, barely seen any kind of retracement, and fallen through Asia, alright? And from New York through Asia into the beginning of London, it's basically fallen in a linear fashion 240 pips. In all probability, do you think that London is going to want to continue to sell that through? Probably not. Right? You might see some initial downside push. Right? You might see some initial downside push. It might drop another 40 pips just to get everybody wigging out. But chances are it's going to do an about face. Okay? So just sort of common logic about buy low, sell high makes sense. Okay? Now, what happens if you log in and you really can't find anything that is relatable? I mean, you're looking around through the correlation, you're looking around through the crosses. I mean, you're digging through the yens, you've looked at the stock market, you can't really glean anything there. You've even gone to a gold chart. Well, now you just start, now you pick a point. Now you pick your favorite pair, the Aussie, the Euro, and you just start breaking it down. You go to your 4-hour chart, you try to glean what you can. You go to your daily chart, you try to glean what you can. And you put together a couple of trade plans, both bullish and bearish, that will put you in a trade. In other words, visually, what is it going to look like? What levels are you going to have to break? What is going to establish a direction and a bias for you? So even if you don't have a bias for that day, and that should be, right, it's frozen on purpose. So in other words, if you don't have a bias for the day, work out what will give you that. Okay, and I'm going to leave that up to you as a technician. All right, and we can work on a problem together. All right, we'll break down a pair just as an exercise. All right, so number 1, bias. Number 2, let's say you are biased to the upside. Okay, however, price has already moved, and this is where I think people get it backwards, in my humble opinion. Let's say price has already moved to the upside 80 pips, but you think it's strong and it's going to get stronger. What is the first thing that you should look for? And it's actually counterintuitive. What do you think the first thing is to look for in this situation? So you're bullish, but it's already sort of gone up 80 pips. Yeah, you should look for a target. You should say, well, where could this be going? You see, I think a lot of folks look for entry without necessarily trying to factor in where it's going, because you have to be able to work out a risk-reward scenario. Now, how can you work out the reward if you have no idea where it's going, or the type of trade, or the a reasonable level of expectation as to how long this is going to take, how many pips you're going to take, what are the other pairs doing on a correlatory basis? Could the relative strength switch on you? Have you checked your crosses? I think working out a target is the most important thing you can do. Is it worthwhile just pursuing this bias? Okay? Now, I'm not going to get in, maybe next webinar we can just talk exclusively about targets and projecting targets. Alright? But working out where you think this is going to go, I think, is priority number 1. After your bias. Right. Then, what is the next thing? You're bullish. You've worked out that your target is feasible. Next thing to do, right, where is my support? In other words, I want to buy at support in the context of an uptrend. At least that's the way I tend to trade. Where is my support? In other words, we'll call this a green zone. Where is my green zone? I'm not talking downtown Baghdad. Where is my green zone? And said differently, if you're bearish and price is wanting to drop, where is my red zone? In other words, where would resistance be for me to short from? And you know what? If price doesn't get to your support zone and goes and hits your target, what happens to your trade plan? Next. Null and void. Moving on to the next one. During the course of a day, I might watch 6 or 7 pairs maximum. It's archived. Much better way to put it. Thank you. Right? If I might put together 6 or 7 trade plans for the day. Maybe more. Do you know how many really realistically come to fruition? 30%. 30%. Because my psychological mindset, and this might sound extremely defeatist, but my psychological mindset is, what can I do today to make 30 to 50 pips? Okay? So, my first couple of years of trading, I wanted to make every pip the market had to offer. Alright? Now, I'm a little more grizzled veteran, and I think to myself, what can I do to make 30 pips? Okay, after your support and resistance zones, you're now going to look for where is your stop, time horizon. Okay, time horizon is important, etc. Break-evens, to me, are not winners. So, this is the general sequence of things, and I think the sequence of things is as important as anything else.